Former Federal Reserve Chair Janet Yellen sitting down in an exclusive interview with our own Steve Leisman earlier today to discuss what the Fed's next move could be. Take a listen.
Of course it's possible. If global growth really weakens and that spills over to the United States, or financial conditions tighten more and we do see a weakening in the U.S. economy, it's certainly possible that the next move is a cut. But both outcomes are possible.
We're also looking ahead to current Fed Chair Jerome Powell, who will be speaking in a little over an hour at a teacher town hall in Washington. He's expected to answer questions on monetary policy. So will the Fed's next move be a cut or a hike? And is the Fed still the key to this market, Tim?
The Fed is absolutely still the key.
Yes.
If you put a gun to my head, because I hate this question, because I still think right now the U.S. economy is in a very good place, and I think the rest of the world is slowing dramatically. Again, the global PMI index is at second quarter 2016 level. I would say it's still a hike. But again, this is a Fed. She used the term financial conditions. That's code for if the markets get really gnarly, and I think the Fed told you again in the Powell Fed, they are willing to give a market's put, which is disappointing, especially the purists like Guy Adami, who's not here today.
The Fed put is clearly there. I mean, they showed their hand over the last couple weeks. That being said, I'm not convinced that they'll actually cut over the next 6 months or so. They could just let this thing run for a bit. They may do some shenanigans with their balance sheet to do stuff. So I don't know if a cut has to be the absolute thing, but I would be very surprised if they raised rates in 2019.
I mean, if they raise rates because things are good, isn't that good?
Yes.
I think yes.
Should we be back to that?
Right. I think that is good. I think that, it also depends on what is the rhetoric, what's the context for that raise, and what else are they going to say about what they intend to do the rest of the year, as well as that balance sheet, which had been completely off the table, is now very much in play, it seems. That I think would be very interesting.
And we heard from Mnuchin talking about the economy's terrific right now, right? I mean, so I would see much more of a rate rise.
What else is he going to say?
Right.
I mean, really.
But it does look pretty good, right? I mean, when we look at the economic conditions here, they look pretty good. Now, elsewhere, they don't look so great, but the put's in place.
But I mean, you'd have to see a massive rise in inflation before the Fed to really move this year. I think they've already showed us that in this environment, unless you've got screaming inflation, they're not going to do anything.
It does seem that they're more comfortable, or they are comfortable with an inflation overshoot. If there's any scenario present that they're like, okay, we're willing to take that risk.
They've already studied that, and in June, you might even get a policy change because that's when they're supposed to come out with inflation targets.
But if things are so bad, the way you say, and the way Joe says, everybody's moving to easy monetary policy around the world at this point, and we actually hike rates, one hike could actually mean very big things because the disparity between us and German bonds is going to be much greater.
Right. 10-year bond at 16 basis points, basically everything we're getting. And by the way, this is all, this is all right now somewhat dollar neutral. I think the dollar is another big factor. The dollar's been under control, but it's started to have a 3 or 4 day rally. I do think the differentials between the U.S. and the rest of the world are narrowing. In other words, if anything, we're coming back to the pack. And I think for now, that's very good for risk assets.
Yeah, and if this is dollar neutral or maybe even dollar negative, that the Fed's weak, then look at gold. I mean, something's going on with that. If you think every central bank in the world is going to go back to printing money, you want to look at gold.